conversation that I had come in during this week during a coaching session is a gentleman had asked a question about, hey, I'm looking for this. I ran a search. This is a common question that comes in. I'm going to show you how to walk through the process, how we walk through the process of analyzing, hey, why didn't this show up? What am I missing? And I believe customer was looking for long calls. And this stuck out in my mind because the long call search he was looking for was good. It's what most of us would look for, but it was more of a home run long call, meaning that he was looking for out of the money calls, 10 to 15% out of the money, low price, with the expectation that the stock would move up 5 to 8%. He was going 40 to 50 days out in time. Stock moves up 5 to 6%. He's hoping to close for a 50 to 60% profit in 10 to 15 days, essentially, even though his option is, 40, 35 days out of time. All right. So if I remember correctly, this conversation, let me go ahead and clear filters. So you have our defaults here. You can see those. Bollinger Band Breakout, that's what Ernie and I use to find our potential long calls. Yeah, and sorry, I should review that. Let me go back to the default here. Yeah, didn't like that. Let's go back to Bollinger Band Breakout. Sorry, folks. Like I said, we're looking 15 to 45 days out in time. Some implied volatility on the position, not going more than 10% out of the money, keeping right at the money. Option ask price less than $20, limiting the bid-ask spread, and more importantly, the percent bid-ask spread on the position. Some basic open interest, and we're looking for options that showed increased option volume, the percent current option volume. If you want to trade, so you hear about it talked about the heat map on some other services. What are the options that are showing the highest change in option volume, highest percentage change in option volume? Hey, you've got that right here in PowerOptions. The percent current option volume, today's total option volume compared to its 30-day average across all strikes in month for that time of day, and then the previous option volume, anything that's shown a high percentage compared to its 30-day average at the close of the day before. So you've got that right there. And, you want to say, hey, I want to see the graphic with the heat map. I understand that, it looks cool. You got the buttons with the reds and the greens, or in this case, you'd be looking at big greens, high option volume, heat map, but you've got it right here. Percent current option volume, percent previous option volume. That's essentially what they're doing compared against the 30 or 90-day average. We're using the 30. Most importantly on this search, though, it's the technicals. We're looking for a Bollinger Band width, a condensed, that's the Bollinger Band, a condensed percentage, but we want the stock close to be above the 20-day upper band days before. This Bollinger Band breakout. We're looking for stocks that are breaking above the upper Bollinger Band and are showing movement and strength. And, of course, just some basic fundamental stocks with good earnings per share growth, minimum stock price. That's essentially it. And we've only got 2 here that are showing it, and that's okay. And Samsara had a good 10% movement today, a little bit over that. And TKO didn't have a big move, but it's showing the Bollinger Band breakout that we want. Okay, back to where we're going with Mark's question. Cheap options, 10% out of the money. Lower range of implied volatility because I'm expecting the stock to move, that it's hit a bottom and it's going to gap up. And also, I want stocks that are kind of just coming towards or crossing the MACD, where the MACD is crossing the signal line. That's what I'm looking for. Okay, so let's go ahead and clear filters. Similar time frame he mentioned, so I don't want to set it to all leaps. I'm not going to set it to all weeklies. I could just look in December. I could just look for January. But normally, if I have a time frame that I want to see in any option where you're doing covered calls, and you just want to see options that are 10 to 22 days out in time, well, I'm going to use all expirations, and we're going to use that 25 to 55 days out in time based on Mark's screen. Percent implied volatility range. What is this? This is the option's current implied volatility compared to where the options implied volatility, the total option, your particular strike, has been over the life of the option since it's been released on the market. Now, commonly when I'm buying options, I might want something that's less than 30%. In other words, at some point, the implied volatility was up at 0.87, but its low is at 0.45. And right now it's at 0.51 or 0.52. I want it to be in that lower range because I want to be paying less into extrinsic value. If I buy an option that's near the 100%, 90% of its implied volatility range, well, I'm paying into extra extrinsic value, extra time value, because it's inflated. Now, if you're looking for earnings plays 5, 6, 7, 8 days before earnings, and you're expecting, hey, I want my stock has earnings coming up in 5 days. I'm looking 25 to 55 days out, but I want percent implied volatility range to be less than 30. You're probably not going to see your stock, right? It's already inflated. It's near 80, 90, 100%. That might be where I want to be selling. Caveat, if I have a stock coming up to earnings, I don't want to be selling a credit spread. I don't want to be selling an iron condor because the wild swings, even with high implied volatility. I know a lot of people say sell into high implied volatility. Hey, that's a good rule of thumb. You get more bang for the buck. But why does it have more implied volatility? That's the underlying question we have to answer and we have to investigate. Because if it has a phase 2 or phase 3 drug trial coming up, well, that's great. I might get volatility crush in my favor, or the stock might jump 20, 30, 40, 50%. And if I'm on the wrong side of the credit spread, or I would be on the wrong side of the iron condor, that's not going to help me. All right, so implied volatility less than 30. He wanted to be minimum 10% out of the money, looking for options. Again, the midpoint price was less than 40 or 50 cents. This is, I don't want to say gambling, but this is trying to hit home runs on a consistent basis. His game plan is, hey, the stock moves up, doesn't have to move up to my call strike price. It just has to move up 4 or 5%. I might make 50% on my calls. Now, I want some liquidity. This is what I convinced him of. I don't want to find low price stocks, $4, $5, $6 stocks, 10% of the money. That's not even that bad, really. You'd be at like 450, 460, 470. But I don't want something that's never traded. So I want at least an open interest, of 0. And I probably want some option volume today. Also, I don't want to get caught with something that's really low price, lightly traded, and where the bid is 5 cents and the ask is 250. I'm going to limit my percent bid-ask spread. The difference of the bid-ask spread is a percentage compared to the bid price of less than 50%. Now, you can also do it numerically. It's hard to do it numerically because I just put in I want less than 5 cent bid-ask spread. Now, I'm going to see a lot of stocks under $100. If I'm interested in trading Meta at 635, or I'm interested in trading, Amazon up at the higher prices, bid-ask spread is going to be $1, $1.50, $2. So the monetary one is a little bit tougher. I want to be 50% or less. I might even want to be 30% or less, but just some basics. Here's what he wanted. Low implied volatility range, maybe, 25 to 55 days out of time. Wants to be 10% of the money with the low cost. And in the technicals, he wants stocks that maybe are coming close or have just crossed the MACD. They've just bottomed and they're coming up. All right, so what we're going to do here is use the day's MACD signal. The days the MACD has crossed the signal line of less than 2 days. I'm pretty sure that's what I did. And of course, that means also so we're looking for over. I got to look for under for bearish positions, but I want something that's just had a MACD cross within the last 2 days. Now, this is positive or negative over the divergence line. I'm going to leave that alone. It's okay to be below or above. Some other basics that we want. Hey, in the fundamentals, stock price greater than 5. I tried to convince him to go 20, but he wanted to go 5. That's perfectly fine. But I wanted some other positives. I wanted some good market cap. I wanted to see he was interested in anything. And that's good. But I wanted to see mid cap. So I just went 2,000 or more. Anytime you have a question about one of the filters is just hover over the parameter or the column heading up above. And earnings per share growth. Hey, I'm buying calls here. I want to see stocks that have at least some positive earnings per share growth. When Ernie and I search for married puts, we're using a minimum of 15. I think Ernie's default here that we just saw in his Bollinger Band breakout, we were looking for stocks that have grown at least 20% in earnings. I just wanted some minimum here. I want some positive growth stocks. Even though it had bottomed out and it's coming up, I want that background there, right? I want that proof that the stock is performing decently and is a good buy. I don't want something with negative earnings per share. Oh, their next earnings is going to be positive. It's okay. It's okay. No, I want a little bit more safer bet. And of course, I'm not going to worry about the earnings date between now and expiration. That's kind of what he was looking for, so I guess I should add it. So I'm going to add the earnings date between now and expiration. As a side note, when you look at my preferred searches for bull put credit spreads, the weekly picks of the day, you'll always see I avoid earnings between now and expiration. I won't trade a credit spread, bullish or bearish, across earnings because there's just too much unknown. We've got that known event with the unknown outcome. Why take the risk on a leverage trade that you can lose 100% of what you invested? I'm not going to do that. All right. So I'd have it not between now and expiration, not for this search, but for the credit spreads, maybe even some of my longer term covered calls, cash secured, naked puts. I just don't want that sudden drop. Let's go ahead and submit. All right. And there's nothing there that matches my criteria. I wonder what is hindering this the most. I think it's probably the earnings because I'm too close and we're not having earnings. Let me increase this up to 95 days. Let me see if that gives us something good. No? Okay. So something else here is bothering us. So we're having the lower range, the implied volatility. We've seen the VIX dropping. Option midpoint shouldn't be a problem. Between now and expiration is probably stocks. It's probably that technical that I want. Let me increase this to 5 days. Anything that's crossed over in the last 5 days with that other change I made, there we go. Okay. So 2 days was too close. But we've got Rivian. Ooh, yeah, I don't know about that one. We got SoFi. Not so sure. Alibaba's good price, but 10% of the money. We're looking at the 250 call at 31 cents. It's a little rough, isn't it? Bank of America, though, not bad, price-wise. Excuse me, Apple. Big gap here as well. PayPal Holdings and Carnival. Okay, so we see what? The options mid prices are all in the ranges that I wanted, right? We are all in that under 40 cents that he was looking for. We're all 10% out of the money. We've got our implied volatility ranges in the lower range. Okay, and still though, we're seeing IVs over HVs and IVs over SIVs mostly in the positive range. They're still overvalued compared to their Black-Scholes pricing model based on historical volatility and the SIV, which is kind of interesting, isn't it? Well, except for the SoFi one. But what was the charting that I set up from? What was that MACD thing that I set up from? Let's take a look at Rivian real quick. And we're going to look at charts. I'm going to use this ACP stock chart. It usually takes half a second to load or so in this case. All right. And okay, so there we go. So the crossover happened. What I'm looking for here, this is usually the signs I use. Okay, so one of the signs. We all have different ones, but this is one of my primary ones. When I see a positive MACD cross, that's usually a buy signal for me. Or if I see a negative one, that's usually when I want to start planning to adjust the position, which I'll also use the market sentiment tool for as well. But this is that 5-day break. It's more than 2 days, so that's why Rivian did not approach. Had that MACD positive crossover here at 1464, and it's been moving up. And of course, I don't want to say dead cat, cup and handle. This is more like a cup and handle, but we had the earnings pop. You see it come here. Hey, profit taking happened, but almost that cup and handle here. I'm almost kind of seeing that move on Rivian. Kind of interesting. Let's take a look at the next one and see what came up for us. Let's close that one out. And I want to go SoFi. I know SoFi's been in the news a little bit. It's also been up and down. And it's been showing us some of the trends that we want. It's been holding. Oh, no, I don't like this at all. Let me clear this up a little bit. So here's something that I'd take a look at and say, did it match my criteria that had a positive MACD cross within the last 5 days? Yes. Is it recently coming off a MACD bottom? Did it here at the 25 zone? Yes. Did the earnings? It middled? Not too much. It sort of went up, but it sort of middled, held, and then declined. But today, seeing this here, let me see if I can increase that a little bit more. In other words, it's kind of dropping now again. And even though it matched my criteria, positive MACD crossover in the last few days, sorry folks, the MACD line is starting to approach back to the signal line, and we're seeing some other bearish indicators in this position as well. Okay, so that did match the criteria. I don't know if this is a choice. I'm going to take Alibaba real quick. It was up today. Just one last one. All right. And no, same, almost the same as what we saw. It went positive on the MACD. And MACD isn't the only way to trade. I'm just saying this is one of the ways that I was looking for him, for things that had recently bottomed and then come back up. And this did, but now it's kind of flatlining. It's not showing me a strong enough trend to say this is something I would want to buy as a call. Now, there's other aspects I have to look at. When is their next earnings coming up? What is the last news with Alibaba? And that's what I would do here. This is our due diligence. I'm going to take a look at the company news, recent news, headlines, indicators, estimates. I'll go through that when I'm opening a new position, whether it's a stock, whether it's a bull put credit spread, whether it's an iron condor. I'm going to look through those. But just wanted to show that these is some of the ways you can use that percent implied volatility range. When I'm selling, I might want it to be higher than 60 or 65% because I want to get more bang for the buck. But if I see something that has a percent IV range of 99, 97, I need to know why that is. If there's no earnings coming up, I need to check the news to see if there's something coming up. For oil companies, it might be a new land lease agreement or something along those lines. It might be a patent lawsuit in tech companies, something that a judgment, again, a known event coming up with an unknown outcome that could drastically affect the trade. You've got to do your due diligence. We can show you as much as you want, but that's a signal that you got to see, hey, this matches my criteria. I'm looking at these columns, the percent implied volatility range for most of my covered call in the money positions that look really good are 40, 50%, but the highest return is at 98%. Why? It's a Gucci. It's a standout. Why is that high? Why is that out of bounds from the other ones around it that have the same criteria? Something's going on. Check the more information button. Go to company info, go to news, go to profile, go to analyst estimates or indicators. You'll probably see something right there that stands out. Say, hey, in 10 days, this is coming up. Your option's 28 days away. Does that match your risk reward tolerance? All right.